stock market today analysis for October 26, 2022. We see the Nasdaq's down 2.04%, S&P 500 down 0.74%, U.S. Treasury 10-year yield down 8.5 basis points, gold up 0.63%, Bitcoin up 2.43%, oil up 3.29%. Today we continuing the tech earnings. Yesterday, both Class C and Class A of Google reported after hours, as well as Microsoft, and you can see there it dropped yesterday and before the earnings report. More after the bell with Meta, Facebook, and I guess that's the other big one. So let's take a quick look at what Google did today. Boom, look at that. Drop down. Yep, another drop. So that is interesting, and so we'll see what happens. We got Apple tomorrow, Amazon, Intel. We'll see how that goes. Another drop. Speaking of drop, volatility index dropping, right down a pretty significant amount compared to like the last couple months, 4.15%. Something else is dropping. The risk indicator was in the getting close to 300 here. Now we're pulling back a little bit, closing out today at 273.7. Still in that high range of risk. However, if it keeps that trend, we could potentially be moving back into moderate risk, but it's got a ways to go. It definitely has a ways to go. We saw that it dropped down here and then spiked back up. Bonds down. All right. So given that the VIX is down, given that the risk is down, and given that bonds went down, let's see overall if the stock market went up. S&P 500 battling that 50-day moving average. We can see that it got up to it. I really like the look of that more, but I think my cursor goes away sometimes when I do this. So we have this high wick to the top here, right? So even though it was a bullish day, it's a green candle, but it's a green candle, but a very bearish green candle. So we opened here, we closed here, it traded all the way up here, but selling pressure brought it back down here. So now we're open and close in this right in the 50% area, like just eyeballing it. Is that in the top 50%? I think it's right in the 50%. So that's looking weak, but volume, got a good amount of volume to get that today. Let's look at the technology sector. I'm guessing going to be on the down. Okay, well, even though similar to the S&P 500, where we have a green candle, but it's that same kind of bearish green candle where we got all this wick to the upside. Volume was good today for the technology sector. You can see the shape inside of this candle. You can see it rallied up kind of, what time was that? Around 11:30, 11:45, we started making this downward progression and just kind of petered out sideways. From there, healthcare Healthcare, all right, broke above that 200-day moving average. And look at that, same thing, try to trade higher up to the top, but selling pressure brought it in. Some good volume there. We got the stochastic starting to spread apart, and that's looking pretty good. Now, if today's candle was like this, it'd be showing some more to the upside. So maybe what will happen is we might end up seeing the price action kind of get stuck, at least the open and at least the close, maybe the close. Maybe we'll see some candles kind of like these doji-ish candles or something like that. Maybe go sideways a little bit, or who knows? Maybe it's gonna rally up. Financials. All right, financial. Another one where it's got that long wick to the top. However, this one just happened to close a little higher, or excuse me, a little lower than it opened. Look at that, almost completely sideways. It does indicate, but it can indicate indecision, but in this case, it's not equal wick and tail to the bottom, right? It's definitely a slant to the downside. Something like this, especially with a red candle, you might be seeing some action to the downside tomorrow. And a little more volume, like kind of equal with what was Tuesday, with Monday's volume. Consumer discretionary, same thing. You got that green candle with the body totally at the bottom and the wick up to the top. Price action closed a little bit, just barely above the 50% mark. It's really, volume is really tickling down here on consumer discretionary. And industrials, that one finally got oh, look at that change. Okay, never mind. Okay, so same thing. We got our body of the candle basically in the bottom, I don't know, 35% of it, and we got this long wick to the top, but it is over the 25-day or the 50-day moving average. Open to close over the 50-day moving average. So let's see if this 50-day moving average starts becoming support for it. Volume about equal, just a little bit higher than the last couple days, that selling volume. IWM, similar story here, with just really a sideways open and close there, real close to that, but above the 50-day moving average. Let's see if some pressure brings it in, getting more sellers in there. Qs, this one is looking even weaker, where we opened and closed below yesterday's candle. Volumes a little bit higher, touching that average volume line. You see it rallied up, probably, is that around 11:45? Yep, 11:45. It's amazing how this stuff is seemingly correlated, huh? So rallied up to about 11:45, then started breaking down. The dollar continued to drop. So we broke this 50-day moving average, but we broke it back down here, right? So one thing that we can see is a difference with this time when we broke it. You broke with this kind of weak bear candle, and then it was followed by this bull candle here. So right now we're breaking it with that's not really a weak bear candle. That's a little bit. You can see it traded just a tad bit lower. Right, you see that little tiny little tail peeking out there, but prices pretty much pushed all the way down, and we see what happened. Let me guess, was this around 11:45? Oh, around, okay, looks like around 11. Okay, so dropped down to about 11 and then went sideways. It'll be interesting to see that. The 20-year bonds via TLT. All right, bonds going up. So let's take a look at this. again, we're getting closer. I think by the end of the week, we might be testing this upper part of the channel. As I've been mentioning, that would be exciting. It would be good to, let's get some confirmation. Are we going to break out of this bear market, or are we going to stay in it? Now, each one of these, see how there's different colors here? Each color change represents 1 year. So we've basically, we're getting close to the end of October. So we've been around 10 months of a bear market. And could it go longer? Yeah, it could. Like back here, around the middle of roughly the middle of 2000, it started dropping down, and then you had a whole year straight down. You had another year straight down. So it was a little over 2 years where it was a bear market. So we could do that. But right here, you see it dropped down, bear market, came down really hard, really fast, and then went up the rest of the year in 2020. But in this part, we had a lot of engineering going on via quantitative easing type of things, whether people want to debate what the name of it was. The actual results is the same. Also, right in here, quantitative easing. This might be QE1, maybe QE1 was here, QE2, maybe QE3, or maybe QE3 was Operation Twist. And somewhere in there, I don't know if it was Operation Twist or another one, there was one that shall not be called quantitative easing, but the result was the same. It drove the stock market up. So, whatever jargon term they put on it to confuse people is irrelevant if you can pick direction. And right now there's a lot of talk. Oh, this is what I wanted to talk about. Okay, so here we have so volatility is coming down, and this volatility is basically the way the VIX index is. Really layman's description here, very just like not a technical definition, but this is basically looking at the price of puts 10 days into the future. So basically, people are buying less puts right now. Why would they be buying less puts? Because their puts are insurance, and people are thinking they don't need insurance, which indicates that why don't they think they need insurance? Probably because they think the stock market's going up. The stock market tends to go up when these go down. The stock market can kind of go up or down with this, but this is showing us that there's less risk. Risk is pulling back a little bit in the market. We see this starting to go up. And we're seeing a kind of weakness. We're seeing the market go up, but weekly, not in 1 week, but not right here is not strong. Okay, this was strong. That's pretty strong. Went up strong here sideways. It's kind of like a half and half. It doesn't seem to be going up like this. It seems to be going up kind of in this kind of staggered lane. So what can happen is that there can just be a lot of talk. There's something called jawboning. They'll say the Federal Reserve jawbones, which basically means they're not going to actually do anything, or they're not going to do any physical thing, but they are going to use talking to to influence the markets. And potentially that's what we might be seeing here. There's a lot of rumors of Fed pivot and yada yada, all this type of stuff. So what can you do? What can you do? Well, obviously you can make a YouTube channel and you can start talking about all this stuff, and that might make you money sometime. But what if you just want to make money trading, right? So what you can continue to sell cash secured put options on stocks that you don't mind owning the rest of your life, choosing a strike price that you would be happy to pay for them at. That's something that you can keep doing, right? That will if you're selling cash secured put options on stocks that you wouldn't mind owning the rest of your life, it's kind of It's hard to lose if you pick a good stock and it survives the rest of your life and you're okay with owning it the rest of your life. Another thing you can do is just paper trade and wait to see, is this going to break out and is it going to remain broken out? If this breaks out, we got to see it stay out, right? This kind of top channel here. Now, some people might want to debate, well, that's not, you know, it needs to be a little higher, blah, 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 it needs to be a little lower. Okay, whatever, I don't care. You know, overall, it's somewhere in this area, right? We see this, there's this top part of this channel, kind of somewhere in this area. And we see here it broke out right around here. It broke out before, but wasn't able to stay in. Broke out here, wasn't able to stay in. So let's see, is it going to break out? And let's see if it breaks out, is it going to drop? And if it drops, it might drop hard like this. Now I know it rallied up a little bit right there, but look at that, it came right back to that point and boom, dropped down hard. Over here, broke out, and look at that, dropped down real hard from basically about 253 down to like, oh, did I say 253? Sorry about that. 452 down to like whatever, almost a little lower than 390. So that's a big drop from coming out of here. So let's see if that happens, or let's see if they keep it out of there. And then we also want to look to see what's going to happen through earnings. Wait, kind of not wait, like don't trade if you're already trading, but wait to make a decision. Are we out of this bear market until after earnings are over and after the midterm elections? And then once the dust settles on those, we'll probably have a really good idea of which trend the stock market is going to be in. Oil shot up quite a bit, right? Look at that big old bullish candle right there. Kind of made this base and then bam, shot up. Is it going to break out of this? You can see where you look to the left, right? Even here, it was making this base. You look to the left, look at that. You see that price consolidation there. You look to the left and it's a little bit lower than that. So start kind of making this base, and there's like these little ranges. Right here, this line, you can see the prices kind of stop there, and it's sort of this range of it. And so anyways, it was kind of going sideways, and right now, is this $88 area going to act as resistance, or is it going to break through that resistance? If it does, is it going to be able to break through this 200-day moving average? Right here, we saw it broke through the 200-day moving average, but it didn't. Hold it. G-O-L-D. Gold went sideways, a little bit of a bullish pop, but look at that. Long wick to the upside, and then now it's getting stuck below that 20-day moving average at the moment. And it would be, you know, I would be really, really happy if it broke 1620. That would be great. I want to see it go down to like, honestly, like, please go down to 800. Bitcoin. Man, Bitcoin. Perfect for the bulls. All right. And that's okay. Hey, like if this, and we got a little bit of red candle here, but that's okay. What the good news is for the Bitcoin bulls is that it is still above 20,000. That's what the Bitcoin bulls want to see. And the Bitcoin bears, you want to see it up here too, and you want to see what's going to happen. You want to test it. Now, either way, if you're a Bitcoin bull or if you're a Bitcoin bear, you know, this is not financial advice. This is opinion advice. And what I mean by that is that, hey, if the facts of the numbers are in disagreement with your opinion, maybe you should consider changing your opinion. What do you think about that? You know, what do you think? You think that's a good idea? I'm not saying if you're I'm saying either way. And what I mean by that is if Bitcoin is testing this 20,000, 21,000 area, and if it ends up just crashing back down again, or maybe crash is a harsh word in this context, but if it ends up dropping back down and it's flirting with this 1900 area here, you know, maybe some Bitcoin bulls should say, well, things are looking pretty weak. It's probably not going to $500,000 in 3 months. And if it continues to stay above this $20,000 area, and if it starts building a base like this, here closer to 20,000, if it starts doing that, then, and it was here building this base around the 19, boom, it pops up, goes from about 19,000 to 20,000. If it starts building a base somewhere in that $20,000 range, going sideways, and then boom, if it starts popping up, maybe that's what's going to happen. So either way, the point is, like, don't get stuck to a narrative. Just get stuck to figuring out what the data is telling you and make your opinion based on the data. Don't argue with the data. And if you want to test your opinions, paper trade. That is the thing to do. Test your opinions. I mean, you could trade real money too. That's a way of testing your opinions. However, if your opinions are inaccurate, then you're going to lose money. And if you don't mind losing money, then go ahead, do that. Or paper trade and figure out if you need to change your opinions. There was something else. You know, I've heard before, the further the base, the further into space. And so maybe that's what we're going to see. Maybe we're going to see, like, it's building this really strong support here at around the 19,000. And maybe it's going to go up. However, you know, we still got this 200-day moving average down. And for the next step, if it is going to go into space, it's got to get over that 200-day moving average. And it's got to break past this point right here, which is what? What is that point? It's like somewhere around, yeah, like 22,300, 22,800, somewhere in there. It's like, let's be extra safe and say, well, either way, if you want to be more less conservative with it, and then go to the breaking past the top of this open and close. You want to be a little more conservative with it, go to the past the top of that range. But it's, you know, it's somewhere in here. If it starts closing and it builds a base like this, even for a little while, starts building a base like this in this area, then it's probably going to start accumulating the strength to go through. So this is great. This is way more exciting than just going sideways like that. Unless you're selling all your condors, then you probably just want it to go sideways. Yeah, so paper trade this stuff, figure it out. Go to iVsuccess.com, download some stuff. I talked about selling cash secured put options on stocks you don't mind owning the rest of your life. Download this. This will give you some guidelines to consider. You can add, you can take away. You know, it's just something to structure a thought process with, of how to select a stock that you would be okay with owning for a long time, where you can sell cash secured put options, and if you take ownership of the stock, you can probably be collecting dividends and then start selling covered call options against it. There's other stuff in here. You can get that stuff. You guys have a fantastic day.